Just check. Are we live now? Just check, just confirm. I think we are live now. Yes, so friends, indeed a warm welcome to one and all to this batch of sums solving on the YouTube channel CA PRATIK NEVE. How are you all doing? I hope you all are doing wonderfully well. So friends, in today's session, our discussion will continue on problems, or you can say sums of customs, and in that basically value in case of imports. Okay, we will continue with that. So I hope you all are doing wonderfully well. Let's start with today's session. So friends, first question we had done, second we had done, third, fourth was also done, fifth was also done, sixth question. Yes, sir. Go to sixth question. Are you all with me on the sixth question? Yes. So friends, if you have not yet subscribed to the channel, do subscribe to the channel, do hit the bell icon so you don't miss out on any important videos and notifications. And friends, I hope you have followed this batch from day 1. Yes, this is our session number 10. I hope you have followed all the sessions well. If not, go back and follow all the videos. Follow this playlist well. It's a very important thing for all of you. Yes. So right from GST, we have done all the topics and we will be doing all remaining topics also very well. So see, sixth question. IDT Limited, Ahmedabad, imported a lathe machine from Germany. The machine arrived at Kolkata airport from where it was transshipped to Ahmedabad airport. Okay, so I am bothered with the CIF value. I am bothered with calculating, see, determine the accessible value of imported lathe machine. So that's it. I want to find accessible value under customs, that is the value of imported goods. Under Customs Act with brief reasoning for treatment of each item, that we always do. Okay. Now contracted CIF price is given, which is $22,000. Now see, actually accessible value is nothing but CIF value. So that way your final answer should be 22,000 itself. But it was scheduled for delivery in March 25. However, at the request of IDT Limited, supplier agreed to deliver machine earlier in Feb 25. So basically, machine will be delivered earlier in Feb 25 itself, for which additional 2,500 US dollars was charged over and above the contracted CIF price. So basically, not only $22,000 but to additionally $2,500 was also recovered. So basically $24,500 is recovered. Now additional information, air freight charges are 5,500. Okay, insurance charges paid $1,300. Inspection charges of lathe machine paid by supplier, the same was neither mentioned in the terms of contract nor required for making the goods ready for shipment. And lastly, transport charges from Kolkata airport to Ahmedabad airport. So basically this is post importation transport cost. So post importation cost will be neglected. Yes, rate of exchange is 84 rupees per US dollar. You have to find out accessible value. So let's go ahead and find out that. Are you ready? Yes, sir. We all are absolutely ready, isn't it? So check, this is your question number 6. What you should do in this question? You should see. Now 24,500 is for sure. Yes, sir. Why? because that 2500 was additionally recovered, so obviously that is supposed to form part of assessable value, that 2500. Now take on your calci 24,500 into 20%, which is 4,900. Now even though they are saying that CIF price is 24,500, but over and above that, recovered is air freight charges and insurance charges. So we have to add it. So 24,500 will be deemed as FOB in this case. In that you will add insurance and freight. Now freight, how much you are adding is the actual, which is 5,500, or yes, or 4,900, that is 20% of FOB, whichever is lower. So you are adding 4,900, and insurance you are adding actual, which is 1,300. So accordingly you will get CIF value. That CIF value will be assessable value. So friends, 30,700 will be assessable value, but in dollars. Please convert it in rupees by applying rate of exchange, which is notified by CBIC as on the date of presentation of bill of entry. So it's given that rate of exchange is 84. So your assessable value will be 25,78,800. Okay. So friends, even though they are calling it as CIF value, we understand that from the facts given that 24,500 is not CIF price, it is actually FOB price. Clear? Yes. So let's go ahead. We have assumed that this air freight and insurance is recovered over and above that. Okay, so let's go ahead and solve this. So give the heading computation of assessable value. Question number is 6. Page number is 137. Question 6, page 137. You will do computation of assessable value of imports. Computation of assessable value of imports in case of machine, in case of lathe machine. Okay, what you can do is particulars, and you can do amount. Particulars and you can do amount. So first of all, you will have US dollars, isn't it? Or whichever dollars it is. First of all, it will start with dollars. Contracted CIF price of the machine. Contracted CIF price of machine. Now see friends, there were two ways of looking at it. If you assume that this is literally the CIF price, then you know your perspective of looking at it changes totally. So see, contracted CIF price of machine is 22,000. It is US dollars 22,000 plus additional amount recovered plus additional amount recovered. See, by whatever means it is for early delivery or for whatever means it is, you should include it. It is US dollars 2500. So total becomes 24,500. So far so good. Now friends, if I assume that literally it is the CIF price, then I should go reverse and I should first get FOB value. So I am doing that assumption that this is literally the CIF price. Now what I will do, less air freight, actual. So air freight actual is 5,500 and less insurance actual, which is 1,300. Ideally I should do this friends. So less insurance, less air freight. So I will minus both the things and I will get FOB value of goods. So what is my FOB value? 24,500 minus 5,500 minus 1,300. 17,700 will be the FOB value. Now what I will do? Now I will do add adjustments as per rule 10(2) of customs valuation rules. In 10(2) of customs valuation rules, first you have is freight. So here it is air freight. So friends, actually CIF value is final assessable value, but in that CIF value, the air freight should be restricted to 20% of FOB. So that's why what I'm doing, air freight, I'm taking actual is dollars 5,500 or 20% of FOB, that is 20% of 17,700, which is US dollars 3,540. So therefore lower, that is 3,540, and then go for second point. After air freight you have insurance. Insurance will be taken at actual, which is 1,300. Now FOB plus these two things will give me CIF. So therefore CIF value. So what is the CIF value in dollars? So isn't it 22,540? So this is the way this particular sum is to be solved. Clear, all of you with me? This is CIF value and this everything is happening in dollars. Now CIF value itself is assessable value. Now therefore assessable value in rupees. So let us change it. Now I want in rupees. So it is converted by applying rate of exchange notified by CBIC. So isn't it 84? It was given friends as 84. Rate of exchange as notified, it was given 84. So therefore US dollars 22,540 into 84 per US dollar. So you must be getting 18 lakh 93,360. Are you getting it, friends? So this is the perfect way of doing it. Okay, because when the word is CIF, that means it is including transport and insurance. So you should exclude the transport and insurance, get the FOB value, then again go back to CIF value as per customs. So this is the CIF value as per customs. Clear? So 24,500 minus 5,500 minus 1,300, 17,700. Yes, into 20%, it was restricted to US dollars 3540. Now what you do? Yes, understood now all of you. 3540 you have considered. So finally 22,540 was the CIF value. Now write the notes for the things which you are neglecting. So in solutions what I have given you, that solution was assuming that given price is FOB. Okay, but if CIF word is stated, please don't do that. Do as we have done in the notebook here. Clear? So, see, inspection charges was paid by supplier, but the same was not in the terms of contract. That's why we are neglecting it. And secondly, transport charges from Kolkata airport to Ahmedabad airport is post importation transport cost. So it is also neglected. So please mention notes for both the things. Okay. So in notes, the first one, inspection charges. Inspection charges paid by supplier. Inspection charges paid by supplier are to be neglected. Are to be neglected. Okay. Why they are to be neglected? As you know, they are not directly related to supply. Okay, first of all this, and secondly, transport charges from Kolkata airport. Transport charges from Kolkata airport to transport charges from Kolkata airport to Ahmedabad airport is to be neglected. Is to be neglected, being post import transport cost. Is it clear to all of you? Being post import transport cost. Okay, that's it. Now we will go ahead to the next question. See the next question now. Question number 7. So 6th is done. Let's go to 7th question. Now you know we are stepping also in the rules. We are stepping in the rules as well. See, Mr. A imported certain goods from his cousin. Now, when we talk about import from relatives, you cannot directly take, whatever is the CIF as accessible value. In those cases, we have to go to the rules. And you know, those rules are 4, 5, 7, 8. 4 is what? 4 is identical goods, 5 is similar goods, 7 is deductive value, 8 is computed value. So to the extent possible, we will do sums on all of these today. See, Mr. Arvindan imported certain goods from his cousin residing in Australia, and C, transaction value has been rejected. So when CIF is rejected, you have to go to the rules under the customs valuation. Okay, due to their related party status. Rule 4 and 5 means of identical goods and similar goods are found inapplicable because there are no identical or no similar goods imported into India. So forget 4 and 5. Now they are telling you the value is to be computed as per which rule. Arvind then furnishes cost related data. So this is called as the computed value method. In this computed value method, whatever is the cost of the goods that is imported, in that cost you will add profit, you will get FOB value, and then you will do adjustments for insurance and transport, and you will get CIF value. That CIF value will be accessible value. So see, he furnishes cost related data of imports and requests customs authorities to determine the value as per rule 8, which is computed value method. Relevant data are cost of materials incurred by Karthik. So see, actually that Karthik is exporter and Arvindan sitting in India is importer. So check, cost of material incurred by Karthik means exporter's cost plus exporter's fabrication charges plus other chargeable expense. All of these are cost and other indirect costs. Okay. Then freight from Mr. Karthik's factory to Australia port. So this is also part of cost. Loading charges at Australia port. This is also part of cost. So friends, all of these are cost. So take on your calci 3000 plus 1200 plus 500 plus 300 plus 400 plus 150. You must be getting at this juncture 5550, 5550. Now normal net profit margin of Mr. Karthik is 20% of FOB. Now what is FOB? FOB is all the cost plus profit. The price at the exporter's port is called as FOB. So can I say cost plus profit is FOB? So right now, if you know cost plus profit is FOB, right now you know that cost is how much? 5550. So can I say cost 5550 plus profit, I don't know what is it, is equal to FOB. This much equation I have understood. But I know the relation. Relation is profit is 20% of FOB. So if I take profit as 20, then FOB is how much? Then FOB is 100 and cost will be 80. So right now I know that 5550 is equal to 80. So profit of 20 is how much? So do the cross multiplication. 5550 into 20 divided by 80. I am going to get 1387.5. Getting 1387.5. So friends, 1387.5 is the profit. So take on your calci now. 5550 plus 1387.5. 5550 plus 1387.5. 6937.5 is the FOB. 6937.5 is your FOB. Now in FOB you add transport cost. Now which transport cost I am talking about? From exporter's port to importer's port. It is 1800, but you know it cannot be 1800 directly because it is air freight. So take on your calci 6937.5 into 20%. It is of course 1387.5. So please now do FOB plus 1387.5 transport plus 70 insurance and tell me what is eventually your CIF value. I am getting it as 8395. Are you getting 8395 as your CIF value? That CIF value itself is assessable value multiplied by 58. You will get assessable value in rupees terms. I am getting it as 4,86,910. Are you all getting 486,910? Just check and let me know so that we will again solve it in detail. Check. 486,910 is absolutely correct. But I would like to take some of your time and I would like to solve it in detail. So please, let us solve it in detail. Okay? Very good. Wonderful. But just give me one moment because my mobile battery is running low. So if I have to read your chats, I will have to bring my power bank. Just give me one moment, okay? This is your question number 7, right? Yeah, yeah. Question number 7, page 137. So I will explain you everything, why we have gone to the rules and all. Just give me 1 to 2 moments. Yeah, I'm back. Let's solve. So give the heading computation of assessable value of goods imported by, yeah, goods imported by Mr. Arvindan as per Rule 8 of Customs Valuation rules. As per rule 8 of customs valuation rules, that is computed value method. That is computed value method. Particulars and amount. In amount, first you are going to operate in dollars, I think. So first just put dollars and then start. A point, cost of materials. Cost of materials incurred by exporter. So you know exporter's cost plus exporter's profit margin. So isn't it 3000? B point, fabrication charges. Fabrication charges incurred by exporter 1200. Other chargeable expense, other chargeable expenses incurred by exporter 500. Go ahead. Other indirect cost 300. Isn't it? Other indirect costs incurred by exporter. So isn't it 300? Then what you have? Freight from exporter's factory to exporter's port. Freight from, lot of costs are there. Freight from exporter's factory to his port. So it is 400. And then you have 150, which is loading charges. Loading charges at exporter's port, which is 150. Now friends, take the total. That will be called as, therefore, total cost for exporter. So total cost for exporter is 3000 plus 1200 plus 500 plus 300 plus 400 plus 150. So basically 5550. Now you do one thing, you add profit, then only you can get FOB. So add profit. Now how much profit is a big thing. So 5550 into 20 by 80. So for this we'll show the working. So you are getting 1387.5. Since it is dollars, I am not rounding it off. So you must be getting 6937.5. So this is nothing but this is FOB. free on board price. Add adjustments, adjustments as per rule 10(2) of customs valuation rules. So how will you do the valuation as per customs valuation rules? Subpoint 1, air freight. So air freight will be actual. Okay, how much is actual? Actual is 1,800 or 20% of FOB. Now what is 20% of FOB? So actual or 20% of FOB, that is 6937.5 into 20%, that is 1387.5. Therefore you have to take lower of the above, therefore lower of 2, that is 1387.5. And then second thing in 10(2) you have to add is insurance. Insurance, so you have to take actual, and actual is 70. Take total, friends. Now that total will be called as K point, that total will be CIF value. So that must be 8,395. That is your CIF value or accessible value. Now calculate converted in rupees. Calculate CIF value converted in rupees. Now that is 1 Australian dollar is 58. So what you will do is 8395 Australian dollar multiplied by rupees 58 per Australian dollar. So you must be getting 4,86,910. So answer is 4,86,910. Is it 100% clear to all of you? Now one more thing I want to tell you at this juncture, that how did we get that 20%? Means 20 upon 80 actually. So profit is 20% of FOB. Therefore cost plus, cost plus profit is equal to FOB. Say FOB is 100. If you assume FOB as 100, then profit is 20% of FOB. Therefore 80 plus 20 is equal to 100. Cost plus profit is equal to FOB. Now you know, therefore here cost you knew was 5550. 5550 is equal to 80. So 20 profit is how much? That's it. So that's why you did the cross multiplication. Therefore 5550 into 20 divided by 80. Make sense? Yes, sir. Absolutely. Now, why did we go to rule 8 at all? We went to rule 8 at all. Actually, no need to write any justification for that. It was already stated in the question that you couldn't follow 4, 5 and 7. Isn't it? So I hope that this is absolutely clear to all of you. Now let's go to question number 8. Lot of time we have spent on the earlier question. Let's go to question number 8. Calculate assessable value under Customs Act with appropriate working notes from the following particulars related to import of a machine by sea by Zenit Tools Limited from Germany in the month of Jan. Okay. Cost of machine at the port of exportation is 9,500. Okay. Now freight from exporter's port to importer's port. You know this is adjustment of 10 to. Cost of packing paid to seller but not as condition of sale, and it is included in point 1. So anyways, that is the amount paid to the seller, na? So it should be included. Actual selling commission. So friends, it is not buying commission, it is selling commission paid to Zenit Tools Limited, paid by Zenit Tools Limited to local agent. So yes, this is an adjustment of 10-1. This will form part of FOB. Actual insurance charges are not ascertainable. No problem. When not ascertainable, you take 1.12% of FOB. You take 1.125% of FOB. Ship demurrage charges, okay, paid by Zenit Tools Limited at the port of importation, and then engineering charges paid by Zenit Tools Limited to consultancy firm in Delhi, but it is as a condition of sale. And rate of exchange is rupees 90 per euro. So really nice question. How we are going to go ahead in this? See, let us go ahead step by step. Question number is 8. Now cost of machine you will start with. As I discussed with you, local agent's commission is an adjustment of 10-1. You will include it, but it was given in rupees. For time being, convert it into euros. Why convert it into euros? Because FOB we want in euros better, because freight is in euros. So freight you will add actual adjustment of 10-2. Now insurance you will take as 1.125% of FOB, and then ship demurrage charges is a part of transport cost actually. That's it. That will give you accessible value. So what you have neglected, please understand, uh, packing charges, they were already forming part of that amount which you have paid. So no need to minus that, it will continue to be included. Selling commission, you know you have added it while calculating FOB. Freight to you know what you have done. Insurance also it was not given, so you know what you have done. Ship demurrage charges, they were not paid post importation. They were till the goods were imported, so they were included. And engineering charges incurred in India are excluded from the accessible value. Okay, because they were incurred in India. Okay. Engineering charges paid by Zenit Tools Limited to consultancy firm in Delhi as a condition of sale, but since they were incurred in India, we are neglecting it. Okay, so can we go ahead and do the solution? Are you ready? Yes, we are ready, sir. Let's start. So it will be question number 8. Question 8, page 138. Computation of assessable value of machine. Computation of assessable value of imports in case of machine. Do you agree? In case of machine by Zenith Tools. By Zenith Tools. Particulars, and originally starting the figures are in euros. So amount in terms of euros. At one point we will need it in rupees, then we will change the currency. But first take it in euros. So it will start with A point, cost of machine at the port of exportation. So A point, cost of machine, at exporter's port. So what is cost of machine at exporter's port? It is 9,500 euros. B point, add adjustments, add adjustments as per rule 10(1) of customs valuation rules. Now in that, freight from port of export to port of import, no, that is actually the from exporter's port to importer's port. It is 10(2). Cost of packing, it is already included, don't do anything. Selling commission, yes. So 10(1) adjustment is selling commission. Selling commission paid by Zenith. Selling commission paid by Zenith. Paid by importer. Selling commission paid by importer to a local agent. To local agent. So what you are supposed to do? You are supposed to add it. Amount is 25,000, but it is rupees. Now you cannot add rupees 25,000 in that euros. So please convert it in euros. So 25,000 divided by 90. So it will be 277.7777 euros. That's it. So now you get. So what I'm going to do is, with your permission, I'm going to write it like this till 2 decimals. So C point, therefore I will get FOB value. This is called as FOB value as per customs. So 9,500 plus 277.78, which is 9777.78. This is your FOB value. Now you will add adjustments of rule 10(2) of customs valuation rules. So in 10(2) what will you have? You will have freight. First one, you will have freight from exporter port that is Germany, to Chennai port, freight from Germany to Chennai port, it is 25,000 euros. So you have to take that full 25,000, but apart from that, wait. I unnecessarily went to next question. Sorry. Freight from exporters, port of export to import. It is 2,100 euros. My bad. 2,100 euros. But there is one more thing. No? There is ship demurrage. So add ship demurrage. Means you had to store your goods for some more time on the ship. So you paid rupees 18,000, but be mindful, this FOB is in euros. So your transport cost, if in euros, it will be better. So 18,000 divided by 90, 200. So that is 2,300. And it is by ship. So there is no restriction like 20% of FOB. That restriction is only in case of air freight. Now go for insurance. What have they told you about insurance? Is not ascertainable. So insurance not ascertainable. Therefore, 1.125% of FOB. Therefore, 1.125% of 9777.78. So are you getting 110? You must be getting 110. So now friends, go ahead and tell me, you have got 10 to adjustments also. Now tell me, what is your therefore CIF value? Each and everything is now covered. Isn't your CIF value 12,187.78? And mind you, this is euros. So CIF value slash accessible value. Now, friends, calculate accessible value in rupees. What will be accessible value in rupees? 12,187.78 into, friends, 90. So you must be getting 10,96,900 rupees. That's your final answer. Check. See this, fantastic. 10,96,900 is your final answer. Clear? Let's go ahead. I hope you're building in confidence with these sums. Anything else we had to state in this question? Tell me. So now I think that you should not lose marks in such things. You should jump on such things in the exam. Clear? I don't think yeah, so notes you could have written about engineering charges. One, that's it. You could have done that. Now I'm going to ninth question, friends. Cyber tech. Yes, Kamlesh, let's go ahead. Ninth question. let's see what it is about. Messrs. Delta Equipments Private Limited has imported specialized machine from Germany at FOB cost. FOB cost given is 3,50,000 euros. The additional expenses incurred by Delta Equipments in this connection are as follows. Now you know, freight from Germany to Chennai port, this is adjustment of 10.2. Insurance paid, this is adjustment of 10.2. Then designing charges paid to German consultancy. Yes, this is adjustment of 10.1. Means it will be added while getting FOB. Okay. These are additional expenses. Very nicely given. Yes. Development activities undertaken in India in related to imported machine neglect. Road transport cost from Chennai port to factory in Hyderabad. Neglect. Why neglect? Post importation transport cost. Exchange rate notified by CBIC. So if exchange rate notified by CBIC is there, please consider that. 88.6525. This and this rate neglect. And then commission payable to agent in India, it is 6% of FOB cost in INR. So yes, you will have to consider this commission, assuming that it is not buying commission. Compute assessable value for the customs purposes under Customs Act, providing brief notes wherever necessary. Okay, so let's go ahead and solve it. I don't think there is any problem whatsoever in this, because like it's a normal question. So start with 3,50,000 euros. Then go ahead, do the adjustments. Which adjustments? See this, start with 3,50,000 euros. Go ahead, do the adjustment of design and commission payable. As discussed, do the adjustment of design and commission payable. That's it. You will get total FOB. Now, actually commission was how much? 6% of FOB cost. So 3,50,000 into 6%, 21,000. So 4,11,000 is FOB cost. Then go ahead and actually your freight. Freight is given in euros, but insurance is given in rupees. No problem. At some point you will have to convert everything in rupees and get to the CIF in rupees, which will come to 3,86,64,491. Now how to do it step by step? Let us see. Question number is 9. Question number is 9. Page number 138. So don't worry, in today's session itself, we are going to other rules also. Today we already did question of rule, if you have seen, 8. In this session itself, we will do one question of 7 and one question of 4 also. Now actually principle of 4 and 5 is same. When I go to 4, I will explain you that. So in short, value of imports we are going to complete today entirely. Okay, so that in tomorrow's session we can do baggage, duty drawback, these topics. See, so computation of assessable value in case of imports computation of assessable value in case of imports of specialized machine by Delta Equipments Private Limited. Let us start. Write down particulars amount, and by the way, amount will be in euros also. FOB cost. What is the FOB cost? So FOB cost is 3,50,000. VAT you will not take here. Insurance, it is 10 to 10 to adjustment. Designing charges paid to German consultancy firm. So add designing charges paid to German consulting firm. It is an adjustment of rule 10(1) of customs valuation rules. Yeah, it is adjustment of rule 10(1) of customs valuation rules. Isn't it 40,000? Yeah, it is 40,000. Then you add that commission. Okay, commission payable to agent in India. Commission payable to agent. So isn't it 6% of 3,50,000? It is 21,000. Check. So you must be getting finally 4,11,000. So 4,11,000 is your CIF value. What it is? It is your CIF value. Or not CIF. Wait. Why not CIF? Because not yet added transport and insurance. So it is FOB value as per customs. But as per customs, because this also adjustment is of 10(1). Then friends, go to B point, add adjustments of rule 10(2) of customs valuation rules. Go ahead, do adjustments of rule 10(2) of customs valuation rules. So subpoint 1 is transport. So friends, transport is 25,000 euros. You may convert it, no problem. Rather, this is in, everything is going on in euros. So 25,000 euros, no problem, take it. Insurance is in rupees. Insurance is 12,000 rupees. So you can convert this if you want. What is the rate of exchange? It is 88.6525. So 12,000 divided by 88.6525. So it is 135.36. Okay, so transport is done, insurance is done, designing is done, development activities was not to be taken, post import transport was not to be taken. That's it. Now friends, finally you will get therefore CIF value, but this CIF value is still in euros only. It is 4,11,000 plus 25,000 plus 135.36. So isn't it 4,36,135.36? Now friends, please calculate in rupees term. So therefore, assessable value in rupees. How to calculate in rupees? It is euros 4,36,135.36 into 88.6525. Please calculate. Are we getting 3 crore 86 lakh 64,490? Check. This is your final answer. Are you getting that? 3 crore 86 lakh 64,490. Perfect. Perfect. Very good. And then these notes you could have included in your answer. So I hope friends you are understanding this well and you are able to practice this well. Then friends, I want to do 13th question. Are you with me on the 13th question? In 13th question, your rule number 4 will be revised. Malaysian company did 1000 metric tons. Important point is donated. Donated means there is no CIF value actually. There is a free consignment. So Malaysian company donated 1000 metric tons of palm oil to a charitable trust in India for free distribution to poor and needy. The Indian trust bore the freight and insurance charges, which amounted to $20 per metric ton. So there is a nominal price for that. There is no assessable value. At the time of import, now in such case what you have to do, you have to go for value of identical goods. So identical goods are nothing but palm oil of Malaysian origin. So at the time of import, Customs Department found following comparable imports of Malaysian origin palm oil. So yes, now what you have to do is you have to consider what are the imports, okay, in substantially same commercial level and quantity. So you can take all three because you want nearest, means not nearest, substantially same commercial level and quantity. So it is 1000. So these three can be taken as near, comparable quantity. So what you have to do, now you have to understand, once you have selected these quantities, you have to consider the prices. Now among the given prices, which is the least that you have to consider? So least is 300. So this 300 will be taken as assessable value. Exchange rate is 1 US dollar is 65. Basic custom duty is 20% ad valorem. SWS you always know is 10% of BCD. You have to compute basic custom duty payable on the consignment under Customs Act with appropriate assumptions and explanations. Ignore, IGST and the AIDC, that is the Agriculture Infrastructure Development cess, that is to be neglected. Main is what is the assessable value. So friends, here CIF value is absent. Okay, actually 1000 metric tons you have imported free of cost, but you will have to pay customs duty in India. Now that will be paid on what value? So take on your calci 1000 US dollar multiplied by 300. That will directly be taken as your CIF. That is 3 lakh dollars. Now 3 lakh dollars will be multiplied by 65, the exchange rate. So 1 crore 95 lakh will be answer. Is it clear, all of you? That's it. 1 crore 95 lakh will be answer. On that you will calculate basic custom duty. It's your question number 13, right? See, 1 crore 95 lakh. Now on that you will calculate basic custom duty at 20% given on that SWS at 10%. BCD was given, SWS is always there at 10% of BCD. That's it. Let's go ahead and solve it. Now actually what I should do is, yeah. So this is question number 13. You understood the principle, right? Principle is you should take the lowest price, okay, of imports of substantially same quality and quantity and same commercial level. So it is question 13, page 140. So what you will say here is computation of assessable value and import duty payable. Clear, no? And import duty payable in case of what? In case of imports of palm oil of Malaysian origin, free consignment. So it's a free consignment. That's why you're doing valuation as per rule 4 of customs valuation rule, that is identical goods. So I hope all of you got it. So particulars, and then go ahead and write amount in terms of, just write amount, keep on writing later on the currencies. So start with A point, CIF value, 1000 metric tons as per rule 4, that is identical goods. So 1000 metric tons into 300 per metric ton. But what it is? US dollar. So it will become US dollar 3 lakh. Of course, we'll do note for this 300. How we got? B point converted in rupees. Can you calculate it converted in rupees? How to calculate? US dollars 3 lakh into rupees 65 per US dollar. So it will be rupees 1 crore 95 lakhs. Now C point basic custom duty on above at 20%. It was given the rate of basic custom duty is 20% ad valorem, 39 lakh rupees. So of course rupees 39 lakhs. SWS at 10% of basic custom duty, which will be 3,90,000. So if you want, you can get therefore total customs duty payable. So total customs duty payable shall be BCD plus SWS. What is that? Isn't it 42 lakh 90,000 rupees? So did you all understand it well? Now the whole point is, writing for how did we ascertain that US dollar 300 per metric ton? How did we ascertain that? That is the main point. So write down. As per rule 4, what you have to do? As per rule 4 of customs valuation rules, the value of identical goods is to be considered as accessible value. Do you agree? The value of identical goods is to be considered as accessible value. Continue. The consignment of commercially same level, the consignment of commercially same level and substantially in same quantity should be considered. So far so good. Now, however, when there are more than one, do you agree? Where there are more than one consignments. However, where there are more than one consignments, then multiple consignments should be considered. Now, what we should have written here? However, where there are more than one such consignments, then multiple consignments should be considered to determine assessable value. To determine assessable value. Got it? The lowest price amongst such consignments is to be considered. Is to be considered. Clear? Now what has happened in given case? So continue. In given case, our imports are of what? 1000 metric tons. Are of 1000 metric tons. Therefore, imports of 500, 900 and 780 metric tons are considered as of substantially same commercial level. Clear? Therefore, unit prices of 400, 350 and 300 are considered. Full stop. Continue. US dollar 300 per metric ton being lowest shall be considered. As assessable value. Clear? Yeah, I think I'm back. Yeah, so by any chance, if you have missed out on any part of the solution, just take it screenshot, just write it, complete it in your notebook. And I was saying that, yes, you must have understood all the things that we have covered in last about 85 minutes. Yes. Wonderful. Let's go ahead now. So what all questions I had planned today is 15th, that is one of the remaining, 16th, 17th. These at least 3 questions. So I think 5 we solved today. Literally we solved them. So very good task we have done today. Is everything absolutely clear, Nimmiji? Now see. In 15th question, what we should do? Xenon Minerals Limited imported 500 units of minerals under high seas sales for resale in India. The selling price is exclusive of duties and taxes. Okay. Additional information, Freight from port to depot means this is post importation. Insurance from port to depot, again post importation. BCD, SWS and no IGST applicable on this product. BCD is 12%, SWS you know. The sales data for identical minerals during the same period is as follows. Now, for how much you are selling in India, that is given. You have to compute assessable value and total custom duty payable, and it's given specifically under Rule 7. Under Rule 7 means deductive value method. Now, what is meaning of deductive value method? Means what you will do, understand. Such goods, 500 units, what is its ideal selling price in India? That you will check. Now, is it 100? Now check, it could be 100 also, it could be 90 also, it could be 95 also, it could be 105 also. There are 4 possibilities. Now you check how many units are sold at each price. At 100, you can see 400, 150 and 50. So it comes to 600. Okay, at 90, this 300 and this 350. So it is 650. At 150, my dear friends, you will get, at, see, you got at 100, you got at 90. At 95, this 500 units. At 105, there is no 105 actually. No? There is 105, 250. So anyways, greatest aggregate quantity, this is called as greatest aggregate quantity. So greatest aggregate quantity is sold at 90. Can you see? 650 units are sold at 90. So 90 becomes the selling price. So 500 units are sold at 90. That is the assumption. So 45,000 rupees is the starting point. Now from 45,000 rupees, that's the ideal selling price in India. From that, you keep on subtracting what? Post importation costs. And you are going to get assessable value. Yes. Hope G. Yes. Full English we are doing. This is our 15th question, right? So see, 650 units at rupees 90. So 45,000 you got. Then you subtracted what? You subtracted freight and you subtracted insurance. You got accessible value. Is it clear to all of you? 100%? Is it clear? Yes. So will you be able to do this? This is how it happens in rule number 7. Then friends, go ahead. So very rare chances of they asking you 7 and all. Then I'll go to second last question for today. Okay, which has anti-dumping duty. So are you ready for anti-dumping duty? A commodity is imported into India from a country covered by notification issued under 9A of Customs Tariff Act. means it is covered in anti-dumping duties notification. Now in such case, what you have to do, CIF value is given at $25,000. So this actually is your assessable value. 25,000 into whatever is the rate of exchange, it would be given. Applicable exchange rate is rupees 60. So 25,000 into 60, 15 lakh rupees is actually assessable value. Okay. Quantity imported is 500 kgs. Exchange rate applicable is given. Basic custom duty is 12%. So 15 lakh into 12%. 1,80,000 is basic custom duty. SWS is 18,000. So friends, calculate. You are going to get 16,98,000. This 16,98,000 you have got is assessable value, but 1698 which you have got is cost of landed goods, landed value of goods. Now what happens is, as per notification, anti-dumping duty is equal to difference between cost of commodity calculated at $70 per kg. So actually 500 kgs multiplied by 70, 500 into 70 will give you 35,000 US dollars, but into rupees 60 will give you 21 lakh rupees. So friends, 21 lakh becomes your what? Cost as per the notification. So 21 lakhs becomes cost as per notification, but landed value is 16,98,000. This is landed value. Now the difference is nothing but anti-dumping duty. So 4,02,000 is your anti-dumping duty. Got it? That is how it is to be calculated. And if you want to calculate IGST, IGST will be on 16,98,000 plus 4,02,000. That is on 21 lakh at given 12%. So that is how this type of question should be done of anti-dumping duty. Please remember, you are see this 4,02,000 is anti-dumping duty, and on 21 lakhs you will calculate IGST. Now see, remember one thing, that your IGST will be calculated in the end. Okay, that is the main point. Clear? So let's solve it step by step. In my opinion, let's solve it step by step, and the next question we will just discuss. This one will solve step by step. So this is your question number 16, isn't it? This is your question number 16. Page number is 142. See, let's solve it. Commodity. So see, computation of what is asked to you. Computation of total customs duty payable. So how to calculate it? When there is anti-dumping duty, particulars and everything I am going to do in rupees only. I will convert every figure in rupees and then only take it. So A point, I'll start with assessable value slash CIF in bracket given. So assessable value slash CIF in bracket given is US dollars 25,000 into rupees. How much is it? 60 per US dollar. So 25,000 into 60 is 15 lakhs. But 15 lakhs is to just assessable value. What you have to do is you have to add in that basic custom duty at whatever given percentage. Sorry. Yeah. So basic custom duty is at 12%. Yes, so at 12%. So you must be getting 1,80,000. Did you all get? So now you do add IGST at, sorry, not IGST, SWS, my bad. SWS at 10% of basic custom duty. That is 18,000. Now take the total. It would be 16,98,000. Now you know this is called as landed value. Okay, you know this is called as landed value. Landed value is nothing but assessable value plus BCD plus SWS always. Okay, once you have got this, go to E point. E point will be your cost of commodity as per notification, as per notification for anti-dumping duty. So isn't it like how much? Isn't it like $70 per kg, 500 kgs into $70 per kg into rupees 60 per dollar. So you must be getting 21 lakhs. Perfect. 21 lakh. Now get F point, therefore anti-dumping duty. So your anti-dumping duty shall be 21 lakhs minus 16 lakh 98,000. So isn't it 4 lakh 2,000? That is your anti-dumping duty. Now friends, go ahead. Therefore, now you will get assessable value for IGST. Now that is, see, assessable value for BCD plus BCD plus SWS plus anti-dumping duty. See the logic. That is, see what was assessable value for IGST? 15 lakh, sorry, assessable value for BCD plus BCD was 1,80,000 plus SWS was 18,000 plus anti-dumping duties 4 lakh 2000. So aren't you getting, friends, 21 lakhs? So now go ahead and calculate therefore IGST at given percentage. Given percentage is 12. So IGST at 12%. So isn't it 2,52,000? Now if you want, calculate total customs duty payable. So what is your total customs duty payable? I'll tell you two ways of finding this. One way is add all the duties. Which duties you have? BCD plus SWS plus IGST plus anti-dumping duty. Add all those things. BCD is 1,80,000, SWS is 18,000, IGST is 2,52,000, anti-dumping duty is 4,02,000. Add all these things. 1,80,000 plus 18,000 plus 2,52,000 plus 4,02,000. You must be getting 8,52,000. Or there is a shortcut, or you can say you can cross check like this. That cross check is 23,52,000. So what is 23,52,000? It is this value for IGST plus IGST. It is 23,52,000. So that 23,52,000 minus 15 lakhs, which is assessable value for levy of BCD. Check. You are getting 8,52,000. In short, 23,52,000 is total cost of imported goods. Clear? This way easily you can do such questions, friends. Whatever questions we have solved in last 10 sessions, including this, see, even 25 to 30% of those questions are asked in the exams, and if you have done them well, then friends, those many marks are secured in the exam. So what are you waiting for? Go ahead and check all the sessions. Systematically see to it that you are able to follow all those questions. Done? Shall we go to last question for today? 17th question, last question for today. Then tomorrow, day after tomorrow, more questions to come up. See, 17th question, going to only discuss it. Compute AV and total custom duty payable under Customs Act for an imported machine based on the following information. Cost of machine at the factory of exporter is 20,000. Transport charges from factory of exporter to port of shipment. This you will add because this is done in the exporter's country. Handling charges for loading the machine on the ship. This also you will add. Buying commission you always neglect. Okay, so basically till this point, this 20,850 is your FOB value. Now lightweight charges is a part of transport cost. It's a part of transport cost. Freight incurred from port of entry to inland container depot. Okay, so this will be neglected because this is post importation transport cost. Ship demurrage charges will be included. This is also transport cost. And freight charges from exporting country to India. This is also your transport cost. So all this is your adjustment of 10(2) of customs valuation rules. Clear? So friends, 20,850 is your FOB value. Transport cost is 5,600. See this, what I have circled, add it, and insurance is not given, you will take it at 1.125% of FOB. So calculate now, 20,850 into 1.125%, 234.5625. So friends, take total of 20,000 plus 5,600 plus 234.5625. 25,834.5625 is the CIF value. Please convert it in rupees by applying rate of exchange as on date of bill of entry, not as on entry invert. So it is 60. So multiplied by 60, you will get assessable value as 15,50,074. Check whether you are getting it as 15,50,074. If yes, then I am going to give it to you as compulsory homework. Many questions we have literally solved today. See this. $20,850 you got as FOB value. Insurance you have added 234.56 and freight you have added. So 20,850 plus 234.56 plus 5,600, 26,864.56 into 60. 16,01,074. Now what happened with me? Totaling mistake? Is it? Huh? 20,850 plus 5,600 plus 234.5625. Huh? 26,684. Totaling mistake. Nothing else. 26,684.5625 into 60. Yes, very good. 16,01,074. That's your answer. So friends, will you try this at your end? Very good. Fantastic. Yes. So friends, I hope that you all have followed the session well. This is our GST and customs for CA final going on in full josh for our January 26 exams as well as May 26 exams. Yes, so I hope you have followed it well. And if any doubt, you can anytime contact us on the given number on your screen. You can WhatsApp us, you can contact on the given numbers. Today was our 10th session, mind you. First 9 sessions, if you have missed, go ahead and follow. We have made a playlist of that and few more sessions to come up. So please do keep following us. Do subscribe to the channel. Do hit the bell icon. I'll see you in tomorrow's session. Till then, stay blessed and keep smiling and be consistent. CA, the word C in CA stands for consistency. So be consistent.